It's Brian Preston, the money guy.
All right, Brian asked this next question. And Brian says, I'm following the 23-8 advice, but my auto loan interest rate is only 2.25%. Should I use extra money to pay it down, or should I increase my 401k contributions? I don't have any match. So should I pay off I'm doing 23-8, 2.25%. Should I pay off my auto loan, or should I go and max out my 401k?
I see this question. People talk about when we do any of the car shows or mention anything with debt with 23-8, people are like, I'm a financial mutant. I've got 0% interest rate on my car. Why would I ever prepay this? Mm-hmm. And I get it. I mean, I think you guys are understanding that, yes, there's an incremental decision that's going on between the low interest rate. But I'm primarily, when I'm talking about low interest debt on step 9, I'm talking about your house, because that's pretty stable in valuation. And recently it's been appreciating rapidly, actually. I'm not necessarily talking about that auto loan, because in addition, now look, trolls, go ahead. I know you're waking up. You're like, ooh, time to climb out of my bridge here. You're going to say, cars appreciate right now. This is a window in time, guys. We're in a very unique, inflationary period where, yes, cars are actually getting more expensive right now. This won't last. So be careful if you think trees grow to heaven, because it will definitely be a moment in time. In normal times, what I don't like about vehicles is they depreciate like a rock. It's not uncommon after 5 years of ownership that you've lost 50% of your value in the car you bought. So you have to take that into account in your decision-making process. So that's why if you have a low interest rate, I think there's nothing wrong if you want to structure and calculate what the payment is to pay it off within 36 months, and then stick to that, amortization table. Make your payments on that. But above and beyond that, I don't want you financing this car for 6 years, 7 years at the super low interest rate and slowing out the pay down of it so you can go load up on the Roth and other things, because I think you run into the risk in traditional times that you might be underwater in that car, and that's just not a healthy thing. So I would have you balance the 3 years with hyper-funding those retirement accounts like the Roth and so forth.
Yeah, and you had mentioned this alternative of paying that down or increasing your 401k. Well, 2.25%, I think you mentioned, that qualifies as low interest, even though that's not often what we're talking about. So there is a tax benefit from doing the 401k if you're doing pre-tax, or even if you're doing Roth, there's a future tax benefit, and that happens earlier in the financial order of operations. All right, confession time, right? I'm a math maniac, right? I just like to do things mathematical. The last 2 cars that I've bought, I did this idea where I was like, oh, Brian, I'm going to do the 23-8. I'm going to stretch it over 36 months. I'm not going to... I just hate car payments. I just hate car payments. So I've made the decision on both the last 2 cars, even though I had every intent to pay them off over 3 years, I just got annoyed with them and I paid them off both within the first year because I just don't like having the car payments. But this is what I did not do, and this is what you just said. I did not sacrifice maxing out my 401k. I did not sacrifice maxing out Roth IRAs, maxing out HSAs. I did all of the order of operation stuff and still hit my 25%. And then I said, okay, could I save more, which would probably be mathematically optimal, or just wipe out these cars? And I personally made the choice to wipe out the cars.
Well, that's what it comes back to. When you talk about the 23-8 rule, there are several additional components that kind of get glossed over. In addition to the luxury cars are 12 months, same as cash, it's also make sure your investments are greater than your monthly payment. Meaning I want you to be putting $1,000 or $800 a month towards your investment accounts, and your $300 a month car payment, I want it to be that way, not $300 a month towards your investments and then an $800 to $1,000 car payment. You've got that all wrong. So make sure you get the decision right on the front end so that your eyes aren't bigger than your wallet, because I think that's a big part of it as well. But I appreciate the financial mutant thought process with super low interest rates. Why would I ever pay this off? But there are some other factors that are in the background that go into this decision making.
Love it.